Well, good afternoon, investors, and welcome to our June 25th, 2024 edition of Bull Sessions. My name is Mark Robertson, and I'm joined here by my dear colleague, the magnificent mathematician from mid-Michigan, Ken Pavula. We just continue to keep putting the pressure on you, sir.
Yes, thank you, Mark. Okay.
All right. And then we're also joined here by Matt Spielman from Houston. Good afternoon, Matt.
Good afternoon, Mark. Hey, everybody.
Hanging out. And Kim said she was coming, but she's also working on the residential construction business a little bit. So working with some contractors. She may join us. I believe she's back in Indiana. But we are going to basically warm up for the roundtable just a tiny bit. But we are going to spend a little bit more time with the rhinos, the Wall Street analysts, in their recommendations and ratings as we go through today's session. So strap yourself in for that. Hence the dancing rhinos on the upper right. We will do a little bit of roundtable shopping and talk a little bit about presidential stuff. Anything else you'd like to cover, Ken?
Are those the Rhinettes?
They could be.
All right.
They're kicking up a storm up there.
Well, they're kicking as high as a rhino can kick. All right.
All right, here's our weekly reminder that Portillo's is not a sponsor of this session, but they should be. But I will point out that while I went on vacation for a few days, you guys did raise the price over $10.50. I have since come back, and every time I check, it goes down. So you can see that I've checked it on a number of occasions over the last week, and we're off about 10% since I returned. And the image is just the type of image I get literally every day now from one of you. That's from Herb Lemcool. And he just basically said, guess where I am. So you guys do check in. I do appreciate the field research, especially as an actual shareholder of Portillo's. And I was stunned to remind myself that I actually bought my first shares around $16 or $17. So you guys all have some consuming to do out there. All right. Here's our standard boilerplate disclaimer. No investment recommendation is intended. This is entirely about education. We are going to talk about the types of techniques and methods deployed by the modern investment club movement. We will attempt to demonstrate and illustrate our interpretations of those. It really comes down to the discovery and analysis of opportunities and the construction and maintenance of our portfolios of stocks. And that's basically what we are talking about here. You will see a demonstration of that tonight if you join us at the roundtable. That is 8 o'clock Eastern time tonight, where we'll have 3 or 4 ideas to actually walk through the specific analysis. Please do your own homework and make your own decisions. If we own something, we'll try to remember to point it out. And just wanted to point out that if you want copies of the slides or if you have suggestions for us, our 2 email addresses are down there at the bottom. Anything else, Ken?
No. If you want to come to the roundtable and have not received a reminder about it with a link, send me an email and I'll send you out a reminder with a link so that you can register for the roundtable this evening. And again, this is the 3rd month now, and our new permanent time is 8 p.m. So if you come at 8:30, you're going to miss the first half hour, okay?
We're probably just getting warmed up anyhow. All right, here's our weekly look at the market as personified by the Value Line Standard Edition. They call it the arithmetic average. It's as if they took and did stock studies on all 1,700 stocks and formed those green lines that are quarterly. So we will be locking in that line on the far right, Ken, the last bar on the right, here in a couple of days, and it looks like it's pretty close to that long-term trend line.
That looks like it's right smack on top, doesn't it? Okay.
Yep, and you ask what's the return on the average stock? Something around 10% is the answer to the question. So that doesn't make it terribly overpriced or anything else. It's kind of fairly valued right now. So we would expect to see a pretty normal distribution of return forecasts, and that's just the way it is.
Well, we would expect to see also, just foreshadowing what's to come, we'd expect to see the majority of our stock studies end up in the hold also, wouldn't we?
Yep, we'll show that in spades here in a second. So again, the forecast formed by the stocks in the Value Line Standard Edition does match up with our work pretty closely. Keep in mind that those are two different universes. We have 2,700 stocks in our coverage universe, so the red dots are just a slightly different group. But the two do kind of map up over, one lays on top of the other. They do resemble each other. And we will be taking a closer look at that next week when we talk mid-year performance and we get out our really complicated graph that gives people headaches, that basically answers the question, does what we do work? All right. Well, here's a question that kind of erupted on me. It came to me in email, and the individual was asking about where can I find information on all the equity analyst upgrades or downgrades. That's who we refer to as the rhinos. And as is the case with many of us, you just have to kind of look them up one on your own. Schwab apparently limits to just their upgrades and downgrades. And frankly, I pay so little attention to this. I was kind of pressed for an answer, so I did have to go kick around and do some hunting. So you see my short answer, I don't know. The rest of the short answer is I'm not sure I care. Didn't want to be that cold about it. There's the longer answer, though. I think for the most part, analyst ratings are not reliable for investors, and that may sound harsh. And I have been involved in doing some studies over the years for trading. You can actually make an argument for when somebody like Goldman Sachs changes from a market underperform to a market outperform, or whatever code words they're using, or secret handshakes, those can actually account for a couple percentage points of return. So, flipping those can be something that you do, but it seems to me like it'd be a lot of effort to capture a fairly small percentage over time, unless you're talking about moving around multi-billions or millions like Ken does.
Yeah.
Yeah.
Mark, aren't a lot of those bounces relatively short in nature also when they make a bounce on an analyst upgrade or downgrade? Don't they the advantage kind of goes away pretty quickly, doesn't it?
Yeah, I think we looked at 3 days to about 10 days, 10 business days. So
Yeah.
3 to 10 days for that type of activity. And there are some people out there that believe that some of the major firms will actually do a downgrade, drive the price down, and then basically back their clients into it for the upgrade that ultimately comes. And I don't know. I don't know whether that's true or not, but it's not that we're talking percentage points, and as Ken has just pointed out, it's just a matter of a few days. So, and then I went on to say, look no further than the extremely heavy buy weighting. We're going to look at that on the buys and strong buys with respect to the Rhino ratings. So we will look at that. And then there are some sources on the right. I was nudged into taking a closer look at tip ranks. I don't know, Ken, do you ever use tip ranks for anything?
No, not at all.
It's actually a pretty formidable source. And Kim reminded me that it comes as part of an E-Trade brokerage account. So I need to see what the depth of their tip ranks coverage is. But I do find it kind of interesting to look at, and maybe we will look at this in future weeks, of much like we look for the best performing mutual funds and exchange traded funds as sources of ideas, these guys actually rate the individual analyst selections. And it might be a place where we could go hunting for some opportunities, especially if we find a few of them are small company specialists. So it might be worth a closer look.
Mark, there used to be quite a division between analysts that worked on the research end of a brokerage firm and analysts that worked on the buy-sell side of a brokerage firm. Is that divide still in fact there? And are the two sets of analysts still pretty separate from each other?
I think it's still there. I hear Josh Brown refer to it occasionally. I'm not one that's ever really appreciated the difference quite so much. I do know from the most recent Morningstar conference that I attended that they were actually breaking down into more of an equity versus bond analyst, and they were basically paying some huge respect to the bond rating analysts when they did that. So I'm not sure. I'm not sure it really matters. Okay, so here's a look that we started last week. The graph on the left is if you take the coverage universe of the Value Line Standard Edition. So by the time you take out some of the closed-end funds and some of the smaller stocks and that sort of thing, you do get about 1,500-ish stocks. And the distribution based on our perspective of how you look at a buy, hold, or a sell leaves you with that distribution, which I would say is fairly, dare I say, normal. I think that that's not an unusual distribution in the way that we look at things. Again, we're driven by, the specifics of the company, the core and quality characteristics. Again, if a company has double-digit growth, we'll treat it differently. We have different buy and sell return expectations for core companies versus non-core companies, and that's how those points are determined. So fair enough,
I would
Ken?
add too, Mark, if it looks like there aren't many buys, there's over 200 buys. That's plenty to build a portfolio from.
Yes.
In that case.
No terrible shortage of companies to buy. In fact, if they all ever end up in the red, you guys will be the first to hear about it. So again, I think
Well, and
that's a
Mark,
fairly. Go ahead, Ken.
I wanted to tie this graph to my par also, and that's why I kind of foreshadowed it a couple slides ago. As my par goes up, we would expect that yellow bar to move down and the green bar to begin to move up, and maybe the red bar stay static or move down a little bit. So as there becomes a higher potential in the market, so at times like at the depths of the pandemic or in back in the financial crisis, we would have expected the buy bar, the green bar, to be much longer than it is currently, and that would be at the expense of the other two bars probably.
Right, and we definitely saw that you may recall back in November of 2000. Well, I'm actually going back to the 2008, 2009 situation. Back in, I believe it was November of 2008, we saw that pretty much a peak in the buy ratings and the reduction in the holds, and then it took a few more months, and then we saw another real peak in March, and that turned out to be a very rewarding time to be shopping for stocks. So yeah, if you're looking at this situation here, yeah, we would expect many more buy zone ratings. And the opposite is
Well,
true down at the bottom.
even in that coming out of the pandemic time in
Uh-huh.
late 2021 into 2022, where the market seems to have kind of spiked a little bit right there, even at that point, we would have expected to see that happen too. The other point that I wanted to make is that when you're managing a portfolio, we need to remember that the first rule of selling has always been to make the portfolio better. And sometimes that means that you don't have to have a sell flashing from your analysis to decide you need to sell something from the portfolio better.
Mm-hmm.
So that there probably is an orange group at the very top of the hold bar right there that at various times will be considered as much a sell as they are a hold in the value line universe at least.
Excellent point. I mean, a portfolio centered decision making does mean that a stock that is in a hold can be a buy and can be a sell. I mean, depending on the specifics of the portfolio situation that you're dealing with. So yeah, it's one of the reasons that we say you really can't even do buy, sell, or hold, no matter what Jim Cramer thinks on a nightly basis. All right, so on the right, what we
Especially
basically,
when you change your mind every 3 weeks. So
I shouldn't pick on Jim.
don't go there.
Um,
Don't go there.
I've never met Jim Cramer, but I've met his people. Anyhow, on the right, again, these are the rhinos, and the universe is the same for the two charts. The difference is you've got multiple analysts covering the companies. We'll look at that in a minute, but uh, I think this is going to go down as one of our favorite slides to point out how different we are, because you're looking at the Wall Street analysts and their total number of buys adding up to 12,000, their total number of holds at 8,000, and 1,000-ish for the sells. So you can see how heavily weighted they are with respect to the buy ratings. And that's what I meant by this when I was answering the question for the subscriber. Uh, that heavy weighting is pretty normal for Wall Street. So I don't know. Maybe I'm putting too much into this, Ken, but I think this is a perfect left versus right. This is how different we are.
I don't think you're putting too much into it, Mark. And in fact, I think that we have to constantly remind ourselves that even though most of us are not paying commission on buys and sells anymore, like we used to, 15 years ago or longer, that brokerage houses still make their money from trading. And in order to be able to trade, you have to have people doing buying and selling. And if you don't have people doing a lot of buying and selling, you don't make as much money in the brokerage house, at least in that particular area, which for many brokers is still a major source of what the income that they have to work with is. So you have to do something different than what we're doing, because we're just not generating enough business for a typical brokerage to stay in business by the numbers of buys and sells that we do in any given year.
Yeah, I think I'm probably a pretty good example of a member of this community. I mean, I do some unusual things, but Kim and I were talking this morning. She was asking me about some of my core holdings in my real money portfolios, retirement accounts and whatever. And I have to confess, I check those like every 3 or 6 months. I mean, it truly is sleep at night, autopilot, whatever you want to call it. Now I have a play portfolio at Robinhood, and I check that more often just for the fun. But I mean, I literally am not obsessing over those. Maybe I'm weird. Am I weird, Ken?
No, you're not, because I spend more time fooling around with my contest entries and doing research for Buttonwood than I am for my own portfolios anymore, Mark. So,
Okay, we got to dial up that Buttonwood thing. That's real money now.
all right. Well,
All right.
it's small amounts of real money, but still
It is.
real money.
At least
Okay.
it's real. All right, so let's take a look at a couple of things. The current Rhino favorite with the complete collection of strong buys is Dycom Industries. So I thought we'd take a quick look at that. And again, just for context, NVIDIA, one of the most widely covered stocks, you can see that they have 55 analysts rendering an opinion, 42 strong buys, 9 buys, and 4 holds. And we'll show what the 1.67 comes from as we go forward. But first, here's Dycom. I was a little bit familiar with the company. I think it's a Houston company, Matt. This is basically a company that's into putting together communications systems. And what I find kind of fascinating is they're both wireless and wired. And now, if we could just take that pile of copper waste that they've got and convert it to Bitcoin, this thing takes off, Ken.
All right.
His
They need.
corporate office is Palm Beach Gardens, Florida.
Oh, okay. I was off by a few states.
Yeah, a whole Gulf of Mexico.
Well, with that wireless thing going on here, anything can happen. But
Okay.
they've got it all covered. They are an engineering and construction company also, and they're going to obviously be economically sensitive, improving quality from left to right. The projected return is somewhere near fairly typical conditions. They have been going fairly well since coming out of the pandemic, and maybe maybe that's what some of the rhinos see. They may be looking at this trajectory as something that is maybe underestimated at this point, giving the rhinos some credit here. Um, everything on the right-hand side of that graph looks pretty good. This is not a bad company. I was kind of hoping that it might swoop in and save me be my selection for tonight, but can't get there at these levels, even though it's a fairly decent picture. Here's a look at their profitability over time and a little bit more description of the company if you'd like to see it. You can see how the analysts are quite optimistic about what they think the future might hold for this company. That's a pretty deep discount to fair value, and nice profitability picture. Morningstar, by the way, descends, checking in with a higher than fair value. A price to fair value over 100 or 1 means that they don't believe that the company is really that much on sale. Value line also is not terribly excited by that 5.8, but there's your look at the company.
Mark, just to remind folks, can you give us what MFI stands for again, please?
Yeah, down at the bottom, the long-term MF index, that's a Len Douglas favorite. It's basically the relative strength index. The relative strength index is a price-only thing that we monitor for momentum or sentiment. Over the past 14 days, one of the few technical analysis things that we will just look at for possible entry. I'm going to cover that tonight, by the way, briefly during the roundtable. The MFI is basically accounting for volume. In other words, the volume of trading also influences that. It's basically taking the relative strength index and incorporating a volume multiplier. So low volume trading versus high volume trading. So MF index stands for money flow index. And
Mark, does it still have the 70 and 30 concepts like RSI does, or are there different places where it appears to be overbought or oversold, or what are the metrics that associate with it? That at 70, would we call this stock oversold based on the MFI index?
Yeah, it's same concept. I believe Len uses a setting of 80 for the overbought and a 20 for the oversold. So it's just a slight modification to the.
And that's where we tend to be with RSI also at 80 and 20, right?
We do, although the traditional set points on Wall Street would be 70 and 30 on the RSI.
Right. Okay.
So we've stretched that out just a tiny bit. All right. So what are some of these companies? This is a listing of the companies that have unanimous strong buy ratings, and from at least 3 analysts. And then I've sprinkled in a few of the other companies that have fairly high expectations from the analysts. The way that the scoring system works is the strong buy gets 2 points, the buy gets 1, hold is 0. If you have a sell, it's a -1, a strong sell is a -2. And you just basically add those points up and average them. So a perfect rating, strong buys across the board would be a 2. Strong sells across the board would be a -2. You're not going to find any of those. So from top to bottom, there are some companies here that are kind of interesting. Theoretically, depending on when these ratings were issued, you could have some momentum in a selection like an MGP Ingredients, which is a good company. It's one that's in a few of our portfolios. Fairly high expectations right now. Here's one that's really been kind of in the dumps for a couple of years, but they sure seem to be finding recovery. Huron Consulting. I do find it interesting here, Ken, that Service Corp and Hillenbrand are on here, both with funeral services, or in the case of Hillenbrand, some hospital supplies. But they're getting high marks from the rhinos. Any comments on any of these?
Only to say that I think that a list like this probably incorporates some really serious turnaround plays in the planning to make them a buy. I'm specifically looking at Cedar Fair, which used to carry a quality rating up above 80, has now had quality drop to around 50. This is the amusement park up in Sandusky, Ohio. I
Mm-hmm.
think they own one other park now also besides the one in Sandusky.
I know they
Uh,
bought some Six
yeah,
Flags. I don't know if they bought them all, but
yeah,
They
but
did. It was a merger. Yeah, I mean,
they've been
Cedar
having
Fair had, I think it was 13 parks worldwide. They own Knott's Berry Farm, or did before then,
mhm.
and a number of other ones. And now they've merged. Six Flags has merged under their company, but using the
yeah,
Six Flags moniker.
but it's certainly been having financial issues for a
Yeah,
while,
a lot
and
of debt, a lot of debt in those companies. I'll say Cedar Fair was. I came out of the great financial crisis going into Cedar Fair, cemented my fandom of Manifest as a non-core company that I found through screening there. And they are and have always been pretty highly in debt, and so are hitting headwinds as their debt recycles into the higher interest rate environment.
Yeah, I took a brief look at it. It looks to me like they are paying off that long-term debt fairly rapidly, at least according to the value line sheet. And yeah, if that's the case, that can be one of the things that captures the attention of the Wall Street analysts. So that's possibly there. All right, so here's
what
another
what
list.
kept what captured my attention, Mark, was that they are opening the highest roller coaster in the world. In fact, Cedar Fair just opened in the last week or so up on Lake Erie up there,
Uh-huh.
and this roller coaster goes straight up, and it's the highest one in the world. The last time Cedar Fair opened a gigantic roller coaster, the last time Cedar Point, which is the park's name, or opened a giant roller coaster, they almost doubled their attendance that particular year. So we'll see if this new roller coaster drives a lot of new attendance and a lot of repeat people that have not been going to the park recently.
So, Ken, are you saying we need to head to the Cleveland area so I can watch you get on this thing, or?
No, I think my roller coaster days are behind me. Okay.
All right. I mean, I would go, but it would also be a hard no from me at this point. I had to be lifted off the Screaming Eagle in St. Louis years ago at Six Flags.
I I I was a roller coaster lover at one point in my life, but at this point, I'm not so sure I want to ride one anymore. So,
Hey, with my vertigo, I can have a roller coaster on demand by just shaking my head. All right,
oh,
enough.
great. Okay.
Enough. All right, so here's a look at some other companies.
Mark,
Yes.
Sharon, who lives relatively close to Sandusky, said that new ride had to be shut down indefinitely already 1 week into opening.
Uh-oh.
So maybe that's not going to be a mover of foot traffic into the park if they have to shut it down already. Yes. So
Maybe
thank you for that, Sharon. Appreciate it.
maybe that heads to the top of the relative strength index list if the price goes in the other direction.
Yep.
Good stuff. All right, here's another look at analyst perspectives on the companies that you probably hear the most about on CNBC. These are ranked by their strong buy ratings. So that's the only ranking on here. So from Amazon at 43 down to Global Payments at 23. That's the number of strong buy ratings from analysts. And obviously, many of the Magnificent Seven end up at the top of this chart. Um, this to me is really kind of interesting because I'll just make one observation. The number of single digit return forecasts here kind of raises the hair on the back of my neck a little bit. What are your thoughts, Ken?
Well, exactly. And I know you've marked Uber as a sell, but I'm looking at all the numbers from a lot of these different companies, and I'm saying to myself, I'm not seeing a whole lot of buys on this list. I think you're correct in marking a single buy on the list. I might go all the way down to the bottom of the list and suggest that that has some interest to me. But then I look at the sales growth number on Global Payments and I say no way. But this whole list, I think there's a number of things that if I owned them in my portfolio right now, I would be considering sales on them. I'm looking at Micron, for example, and I know the analysis for Micron is very difficult to do, like any of the highly cyclical chip stocks, but still 3.6% is a really low number to have to deal with on an SSG. Block, another tech company, so I'm saying to myself, there's a fair number on here that are not what I would consider to be core companies, and they're definitely looking at pars under my par, under the average, and therefore I might say that there's a sell for half dozen on the list. Besides, I understand why you picked Uber with that low quality. But I'd look at Block with that low quality as well. I
Well,
don't think 33 is anything to whistle home about. So
okay, so keep in mind that this is a list of screaming buys by the rhinos. The
I
buy,
know,
the buy
I
and
know.
sell that we show on here is not me. It's us.
Yep.
I'll put us in parentheses, and it goes back to that this chart right here. And literally, the buys and sells on here are triggered by, in the case of Uber, the return forecast checking in at 6 or 8% is actually underneath my par, which is, as we said earlier, about 10%. So the low quality in combination with that is enough to our algorithm kicks out a sell. And the buy for Alibaba is just simply because this number is so elevated. I mean, this would be buy question mark for most of us. But keep in mind that you're looking at 20 of the highest, strongest conviction buy ratings on Wall Street. And when we look at them using our criteria, it's a blank. Now, the other thing that I would point out, and again, I don't mean to jinx anything or cast nasty aspersions or anything else, but this really does remind me of the year 2000 and looking at a similar list back then with Cisco Systems being the screaming buy at the top, and it was screaming off the charts. In fact, I wrote an article for Better Investing magazine where I talked about it being on the jumbotron as a strong buy, and the price at the time was in the 80s. Within weeks, it was down to 10. And I'm not saying that that's going to happen, but bubbles do happen, and you just want, if you own some of these, you want to make sure you are counterbalanced and counterweighted with some less frisky stocks, would be my opinion. And then
There's not too many we can point to on this list that we would call core. I think that's a real short way of saying it as well.
mm-hmm.
I mean, there are some. There's no doubt about it. I mean,
you look at
Microsoft
MasterCard.
is my largest holding, Microsoft's core in my portfolio, but there's a lot that I just don't think you could point to and say core,
Yeah, there are a lot of really good companies, including now the largest company in the world, most valuable company in the world. At least they were. They're now second, but NVIDIA. But just kind of fascinating. And then Ken, you were pointing out earlier that we want to know more about this one analyst who has a sell on ASML because
Yeah, there are 25 strong buys and 5 buys, 8 holds, and 1 strong sell. I'd like to talk to that lady or gentleman and find out what they know that we don't know about this company, because ASML happens to be a company that I really appreciate quite a bit, and even at 7.8%, which I think is a low par for this company, I still would continue to hold this one because of its growth.
Yeah, we could let the air out of their tires or something to show them what we think of them.
Mark Len is making a point in the question boxes there that he doesn't see Apple anywhere on these lists.
Interesting. I'll have to check that one, Len. Apple is not on the most strongly bought list. We'll have to look at what the numbers are for Apple and bring that back next week. Good observation. I think I was just imagining it onto the page here. Huh. All right, so moving on. If we're done with that subject, Ken.
I think so.
You asked for this last week, and Matt Spielman provided it. So you guys go ahead and just have fun amongst yourselves.
Well, I just wanted to know if taking inflation into account, did the markets still seem to be a little bit frothy? And I don't know if I'd call it frothy, but I do think that it's elevated over what it has been for a reasonable number of years. These graphs go back about 30 years. So I think they're showing us that even with the inflation being adjusted, and the adjusted graph is on the right, if I'm reading this correctly.
Mm-hmm.
Am I, Mark? I am.
Yep.
Good.
Yep.
So there's still a little bit of froth, if you will, in the market. I guess I'm kind of surprised that the market wasn't a little bit flatter during the times of zero interest rates, but there were a lot of things happening in a couple of these years to warrant this down and up kind of motion going on here. So,
well, you can definitely see the flat spot in the market here. You know, the lost decade, as Ken talks about quite a bit. There's your lost decade, and notice that on the right, there's actually a slight loss because of the effect of inflation over time.
Yeah,
and
peak to peak, yeah.
Other thing I would point out is looking at the stock market this way, the last 3 or 4 years have been pretty good. Looking at it this way, we're basically back where we started.
I think it's
over a 3 or 4
kind
year
of
time frame.
Interesting, Mark, that we don't recover from that 1999 peak there until almost 2015, if you take inflation into account.
Ooh, I don't even want to think about that. Anyhow, this really does show that. Go ahead, Matt.
The only thing I would add for those not automatically adjusting, these are logarithmic or semi-logarithmic charts, just like the SSG. So when you were talking about how straight it was in the 0%, right? It's not very volatile. It's fairly constant.
It's just like on an SSG then, so that you're talking about consistent growth. When the straighter the line, the more consistent the growth then. Yeah.
Yeah, and this is a pretty magical period here from from the end of the financial crisis.
And just think of all the people that sold out of stocks because they couldn't handle that down. Just at exactly the wrong time.
Yeah, it gives me a warm glow feeling about you've heard us talk about my Lady Di discussions back in that time frame. So good stuff. All right, and it does show the roughly 3% inflation, at least when it comes to the realm of investing, in the difference between the two annualized. So that's there. All right, quickly checking in on our top 10 most widely followed companies. There they are. As I said last week, we added 8, 9, and 10, that being Home Depot, Stryker, and CVS Health. CVS Health has been a bit frustrating for us. I will point out on behalf of the inestimable Cy Lynch that we picked 13 stocks for the roundtable in May because of our double header roundtables. So 13 stocks were selected. Only one stock has gone up and beaten the market. That would be CVS Health since May. So it's got some room to run.
If I'm remembering correctly, Mark, wasn't CVS at around 14 just a couple weeks ago?
You mean minus 14?
That's what I mean, negative 14.
On the relative return, yeah.
Okay.
So they've actually had a decent 4 or 6 weeks. So good stuff. And again tonight, our roundtable, I didn't update this chart. We actually crossed over into 17.1 here, so we're back up 5%. We'll show that in a second. Here's the roundtable. All right, here's checking in on our groundhogs. Figure we're getting started with summer, so we'd put Jim Gallagher's toes back on the cover page here. And Jim continues to hold down a fairly commanding lead, thanks to his space stock. But pretty solid group there up there at the top. It is still early. We are not quite halfway through. And it's just pleasant to see 7-digit numbers going fairly far down the list. In fact, all the way down to me. I have over 1 million, for those of you wondering. But Ken, you're hanging in there in the top 10. I think Kim was actually on the list still.
Kim's lost a little bit. She's down to number 28, but she's still in the top 40 something there. The couple that I'm watching some of the past winners. I'm watching Broad Assets just keep moving up this list slowly but surely, and I'm watching Anna Gombar, who has won it at least one time, maybe more than that, right, Mark?
No, I think she's won.
Just
One
one
time.
time,
Yep.
okay, but she and her husband have certainly treated this contest like their own a lot of different years. And look at that move again from 36 to 22. That's a pretty decent move up the list.
And I would, in a disappointed and sad voice, point out that Anna and I were basically tied about a month ago. So she's decided to move on without me, apparently.
Well, I'm pretty happy I'm still in the top 40.
Yeah. Hanging in there. Ardelyx is going to save us all, Kim.
Absolutely. Too bad I don't have Lila in there.
There you go.
It's beginning to sound like a chant at a mass, Mark. Okay, you know?
Well, there is some religion involved here.
Okay,
we do have roughly.
There may be some praying.
Absolutely. Well, about a third of us are beating the market, beating the Wilshire 5000, which means that guarantees 7 digits in this case, and we continue to see that indicator, or at least nudger, as we've been talking about it for some time. The value line arithmetic average typically leads the Wilshire 5000 over the long term. And the fact that over the last couple of years it's lagged just suggests that there is some opportunity in the medium and smaller companies out there. All right, moving on. Oh, this is just a pet peeve. I know we're not supposed to get political, so I'll stay neutral. But every night they start the broadcast with this national poll, and it's basically meaningless. And that may sound harsh, but I mean, you can construct just about any possible outcome with the situation that we're looking at, which is where we're going to end up if Kennedy stays in the race. Of 2 candidates, somewhere around 40% and virtually tied in the popular vote. And under that scenario, a candidate can get all the way up to 315, one of the 2 candidates, with it that close. So really it comes down to, just like they say, the battleground states that they're talking about. I would really like to see them almost report these polls, with an electoral notes box or something to suggest it. So that's just my pet peeve for the day. And our reminder that, there is a debate this week. Apparently you have the option of listening to Ann and Ken instead, and Susie, which is what I will be doing.
We're gonna do a ticker talk. Ann and Susie are starting a brand new series on AI, and they're going to do a ticker talk segment every month on AI for, I don't know, 4 or 5, 6 months. Susie's going to take the lead on that, and she's quite knowledgeable in this area, and she uses it quite a bit. I was surprised at how much it's actually being used by some people. And we're also going to talk about the preferred procedure on Thursday night, and we're going to talk about the learning library and how it can be utilized by a lot more of the members that are not utilizing it at the moment. So if you want to come, that's an 8 o'clock ticker talk, and you can register by dropping me an email, and I'll send you to the right place, or you can register right on the Better Investing website on the home page, right on the front page. You can register.
Sounds good. All right, here's just a quick reminder that we are gathering again tonight for the June roundtable. We hope, Hugh has told us that he will be there, so we will have the original 4 nights for the first time in quite a long time, because Hugh has been so busy. Cy's also a very busy person. So it'd be good to have all four of us. We have reached that magic number of 5% relative return with our 17.1 absolute annualized return up at the top. That's a rate of return. So come and watch how we do that. All right, just a quick screen looking for, again, this is in the spirit of Hugh McManus. I went looking, well, actually, this one is mine, the ivory screen. I'm just looking for companies with outstanding, excellent quality in combination with a superior return forecast, hopefully in the sweet spot. Use the manifest rank to do that. And this is the list that is generated by that one screen. I probably limited it to at least, well, I didn't. Normally I would put in a 5% growth rate and that would have knocked Hanover out. But pretty interesting set of companies. I'm going to go with the same. I very rarely do repeat selections, but nice is too nice to bypass for tonight's session. And then, yes, that's a silver spoon down by LVMH in honor of our one percenter Ken Kavula and his selection of he just likes the way these words sound when he's pronouncing them. So that's why he picked the company. You know he did. So good, clean fun. Yum China.
I want to make the same observation that Matt made before the session started. And folks, if you're not looking at the industries that these companies represent, take a look real quickly and ask yourself how many insurance companies are on this list. And maybe that means that insurance is something we should be kind of taking a peek at least, if not taking a hard look.
Yeah, a few minutes ago, I was trying to anticipate where McManus might go tonight, because you never know with him. It's Irish investing and gone wild. But he has mentioned the thought of Aflac as an interesting play. He believes that the cure for cancer, or at least a considerable progress, will be made relatively soon, whatever that means. And he said, just imagine what that does to their liabilities, if and when that happens, and what does that do to the financial standing of that company. So for a long time, he's been accumulating Aflac just on that speculation alone. So maybe he'll have something to say about that tonight. And Yum China came up near the top of this list. At least it's on here. I walked away from that one, and it's actually lower than when I walked away. So I'll call that a win for now. Not ready for China. And then here is Ken's his silver spoon situation. Like the graphic.
I first thought the little picture was a Tastavin, a wine tasting spoon.
It could have been.
I'm glad that you clarified it. There's some confusion.
Well, I figured, this is a spoon from the 1800s. It's probably going to be a pretty penny at this point. Sterling silver. Anyhow, Ken's bringing LVMH, and we should have some fun with this one tonight. And then a question that came from a couple of different people about, what's our outlook on ACMR, ACM research? I think it made this page. It did. Fifth one down. Just an ominous comment from Value Line in its verbiage, its editorial, that they've suspended the company's ranks. And I don't know what uncertainty they're talking about, but it's probably worth waiting to find out, what they see or what they're afraid of. That's come up in a couple of different settings that we've had.
I guess the one fact that I think that I would like to just put out there about ACMR is that even though it's an American company, it does the majority of its business outside of the United States, and more than 50% of its business is done in mainland China, with a lot of the manufacturing facilities located in mainland China. So they're beholden quite a bit to whatever goes on in the government there. And I think that's one of the reasons Value Line has kind of pulled back a little bit from considering. Now, to balance that just a touch, ACMR does have a manufacturing facility in Korea, and they do have a lot of R&D, research and development, in the U.S., but they do have a huge amount of business and of property in mainland China, and that might be problematic as we move into the next couple of years.
Fair enough. All right, here's a reminder that we do archive all of these sessions, whether they're bull sessions or roundtables or other special educational segments, on YouTube. If you go to YouTube, just search on Manifest Investing or Roundtable or Bull Sessions, you will find this page, and that includes an archive which now goes back over 10 years. So you can go back and have some fun with some of our humbling moments over the years.
I'm just going to do an editorial addition to what I just said about ACMR, because Nick in our audience went to their 10K. I said more than 50%, and I was correct to their business, but the number is actually 84% of their revenues coming from China, according to their own 10K.
Yeah, that could be potentially dicey if they're on to anything of substance or material. All right, just some fun here. NVIDIA became the most valuable company in the world a few days ago. They have slipped back to number 2, but they actually are reporting problems of some of their professional staff just saying, walking away and retiring with $10 to $20 million in options. And it really, I don't know, Matt, are you aware of this happening at any of the places you've haunted? It's just,
Well, I mean, it's not a new thing. It's probably just in the matter of volume. I mean, you can go back
magnitude.
and look at probably there's some people who left Cisco in a timely manner. But you know, there are plenty of ex-Amazon, ex-Apple people who go on to dabble in startup companies because they're independently wealthy.
Yeah.
So I you know, I have no idea if it is more or less frequent than it has been in past tech booms. If not to call it a bubble, call it a boom. But it is a real thing. Yeah, I also think that for probably the most core people, you know, at some point you're not working for the money. You're working to do something that's really interesting or is that you highly value. You know, you think you're making your, as Steve Jobs says, you're making your dent in the world. So you know, it might be, but I doubt that those people are walking away with, you know, the next generation of IP in their heads.
Mm-hmm. Well, Jensen is clearly trying to stay ahead of his sister, so
yeah.
At least Ken believes that.
Just an anecdote, Mark. We had 8 or 10 of our directors from Puget Sound about 20 years ago in their late 40s and 50s, completely retired from Microsoft and working in the Better Investing Puget Sound chapter as volunteers. So this is not a new kind of a thing when your company suddenly becomes extremely profitable and you are faced with having options that are worth a heck of a lot of money.
Yeah, I think the difference here was the incredible rate of increase in the short amount of time.
Swiftness at which it happened, right?
Okay. All right. And here's a little bit of a tease for perhaps next week or the week beyond. At some point, I would like to tackle the subject of how to really think about buybacks. And Meb Faber, who's a wonderful person to follow on Twitter, now X, but really a smart guy in the realm of investing. And this is something that he believes in. It might be something for us to dig into with a little bit more perspective, the way that we look at the planet.
And who is Ken French, Mark? Do we know?
I don't know. He's the guy that said this.
Right.
I do not know who he is unless he's the French Fama guy. I do not know. I will know the next time I come back.
I'm giving
Roth family distinguished professor of finance at Tuck School of Business at Dartmouth.
There you go.
There we go. Okay, so he's an academic. All right.
So he's a fellow doctor with Roger Federer at Dartmouth. That was one of our better quotes in a long time from Roger Federer last week. All right, just a couple pictures. That is a picture from my office window on the right this morning. No, but close. The thunderstorms continue to roll through Michigan. And the one on the left is just showing that if you're going to paint Stonehenge orange, you might want to leave it to a higher power and not bags of paint. All right. I think that's all we got for now, Ken. Anything in the hopper?
Nope, but we'll be on again at 8 o'clock tonight with our roundtable presentation, and we hope that we'll see a lot of you there.
Yep, I will point out that I'm going to be doubling down on nice systems. Ken is going to do that company I can't even pronounce, so he'll do it for you. And Sai is going to do the perfume company, Interparfums. And Hugh is a wild card. So we'll see you all later. Good hunting out there. Let us know if we can help in any way. Take care.
Good night, all.